Folks, the context of our next panel discussion is again relevant, compelling, and has a business case to it. The topic is using digital to tap the untapped credit market. The global credit market is growing at a breakneck speed as the needs of the people are intensifying by the day. To make use of this wide market, deploying digital technology can be a very handy tool in the long run. So it's very important for us to understand the granular idea about this facet using digital to tap the untapped credit market. And we have with us, like always, our set of experts, influencers, thought leaders from the world of fintech to elucidate and share their depth of expertise and diversity of experiences with us. To moderate this part of the panel discussion, we have with us the co-founder of Bureddy Loan, Mr. Srikanth Bureddy, and joining him on stage are our following set of illustrious and revered speakers who have created a significant impact in their sphere of work. We have with us Mr. Saurabh Puri, Chief Business Officer, Credit Cards at Zaggle. And we also have with us Mr. Pramey Jain, co-founder and CEO at TartanHQ. So on this note, I hand over the stage to you, Srikanth. Over to you.
I have to speak in this? Yes, thank you. Yeah. Hi, guys. Everything is perfect? Nice. It's very difficult. I need to see my panelists. Can you help me, please? I don't know how many panels. Thank you. Thank you so much. I don't know how many panels we have with only 3 or actually 2 panelists. And Saurabh and Pramey. Thank you for being here.
Thank you.
Yes. Am I too loud? Because I'm perfect, right? Thank you. See, the topic is like well-designed topic that how the growth, we talk about the growth of digital marketing, growth of digital lending, growth of how we can reach to maximum people. The topic is how, what, and how we are going to get into untapped market, digital lending. I want to ask both of you, what is that one reason that digital lending is taking time beyond e-commerce? Like digital lending is much older than the e-commerce and commerce. But why digital lending is taking more time than e-commerce? Because e-commerce cracked it by doing 2 things. One is fast, one is cheap. Is this fast and cheap is coming in between the growth of digital lending in untapped market? Sir.
Oh, I think that's a very good question. If you have to compare e-commerce versus the other segments, I think it's more to do with the segments we are talking about for lending. I think one of the reasons why digital lending has not taken the kind of shape it should have is the way we are underwriting the customers. I think that's a very, very important aspect to understand. The conventional way of underwriting, especially the MSME segment, if you take an example, the current banks will not be able to underwrite given the current framework of credit assessment. I think that's one reason why digital lending has not been able to catch on. Whereas digital lending on the other side can redefine the entire process, how the customer is underwritten. So there is so much of data available today. Let's take an example of GST. So today, using GST data, the transaction data, UPI transaction data, there's billions and billions of transaction data available now. We can build scorecards around that and move away from, asset-based lending to a cash flow-based lending or transaction-based lending. So that is one reason the way the banks are underwriting, the lenders are underwriting, the conventional underwriters, they have to change the way lending is happening, and it has to change to a new kind of lending.
I have a slightly different view, actually. So if you look at who's driving e-commerce, who is driving digital lending. If you look at India as a geography, as a population, we are a pretty young economy, right? And 66% of the population is below 35 years of old. And if you look at e-commerce, there are very repeat use cases typically that happens. I want to buy a phone, tomorrow I want to buy something else and everything. And if you, another aspect to look at it is the e-commerce is also being driven by the digital lending, if you look at it that way. That a lot of transactions that happen, high ticket transactions especially that happens on e-commerce are digital in nature and driven by lending, right? There is a card behind, there's an EMI behind, there are certain things behind, right?
That is there, but is it there in the untapped market? That is there in like metro cities, tier 1, tier 2, it continues, but what the topic, what we are talking, is it there that people are buying through credit card in a small village?
Yeah, I mean, even e-commerce is driven by those geographies, right? When we are talking about, but in general, the point that is lending behind e-commerce. The answer is certainly yes, and there are aspects to it. Obviously, in terms of regulations not being, being getting updated now. There are new models being tried out, like BNPL. Again, that is happening. There's a PPI cat that is happening.
Yeah,
So,
but
yeah.
Pramey, from where I'm coming is whatever you are saying, it exists. It exists in the market, what we know. Does it exist in the market which we doesn't know? So I'll continue with another question. Then.
Sure.
So I always feel that everyone need growth. Every category, every organization, every industry, everyone need growth. Does India have enough money to tap into the untapped markets? Is the restriction of they don't have enough lending power? That's why they don't want to get into the smaller markets with a bigger risk. Sir, Saurabh.
No, I don't think it's about the money supply part of it. I think it's, as I said, there is definitely a demand side of it. If you just look at the demand side of it, if you look at the credit gap today, only 10% of the entire MSME population gets credit through a formal channel. So I don't think that's the problem. The problem statement is these are small ticket loans. The conventional way of collecting money from these borrowers is a difficult ask. And that's it. And end of the day, you are lending money. It's a public money what you are lending, and you have to get this money back. And unless you have a very good collection mechanism, the underwriting will not change. You will look into all those credit histories. You will look into income proofs and bureau footprints and things like that. So I will repeat my point that it's very, very important that how do we go about underwriting these customers, the unserved ones? Maybe start with small ticket size loan, and then bring them into fold, and then gradually you can graduate them to a larger ticket size loan and for other needs and all. So I don't think supply is an issue. I don't think geography is a constraint. And e-commerce and the topic what I'm talking about, the segment I am talking about, these are like two different use cases. It's e-commerce is more of a retail kind of loan, slightly tier 1, tier 2, tier 3. And if you're talking about credit card as a product, I don't think credit card even scratches the surface because it's hardly any penetration in India. And then if you talk about other retail lending products like consumer durable loans or BNPL, that is also not very deeply penetrated. The lending need is it's beyond retail, So I think that is something which is still not happening, and we have got a long way to go on that.
Pramey, please.
Yeah, so definitely I agree with Saurabh that demand is a challenge, and how to cater to demand is a challenge. Supply is never a problem. I think in a country like India, there are people who are ready to put money as well. But I think what taking away from what Saurabh just mentioned, the entire infra, in terms of how to lend and collect, there are a lot of missing pieces in the entire journey. And I think while there is a lot of work happening in terms of the India stack that is coming up, the account aggregator framework, there are a lot of stacks being built. But I think slowly we are getting there in terms of the entire digital market can reach to everybody. The good part is now everybody, 750 million people have mobile phones now, right? There's such a large population. A lot of young people are there. Again, as I mentioned, 66% of the population is below 35 years. They know how to use digital devices. They know how to use their apps, etc. So eventually it will come, and with the right infra that is getting built now, I think it will pave way for future to get where we want to see, where the digital lending and other things have to be.
Okay. Do you guys see, is there any trust issue? So why I'm saying the trust issue, the growth, one has to stop, or two people has to stop. One is borrower stopping the growth, or is the lender stopping the growth?
I would tend to believe it's more the problem is on the lending side of it. As I said, supply is not a problem. If you're talking about financial literacy here, yes, this used to be a problem maybe 10, 15 years back. I think this country is young. It's becoming savvy by the day. I don't see that as a challenge. I think it's more to do with the lending models what we have.
So lender is stopping the growth.
I agree with Saurabh here. You know, there are frameworks that are getting built. I think people are too scared to make certain attempts at times, you know, in terms of, we saw what happened with PPI and BNPL. While the idea is right in terms of there should be right regulations, who should lend, how it should be lent, etc. But I think there is limited scope in general to experiment and go all out in the market and, you know, experiment. So yes, you know, there is a marginal, I would say, you know, call that, you know, many fintechs want to take, but they can't take, you know, in general.
What is that?
In terms of taking risk and, you know, go out and take the money. So there is a risk element does, you know, hamper or,
No,
you know, slow down the growth.
that risk exists everywhere. I mean, risk exists in the metros also. Maybe there is a higher surety in the metros than the tier 3, tier 4 kind of places. So the brand, you know, there is every category they have sub brands. And intentionally or unintentionally, we keep seeing. For example, in the loan sector, the salaried as a word become very big brand, and self-employed, which is followed with that. Now, do you think a third kind of category which exists in the untapped market, which banks or the fintechs not able to coin any policies towards it? Saurabh.
No, so as far as customer segments are concerned, obviously you have to classify between a salaried and a self-employed. Salaried, as I said, it's an easier problem to solve. I think you exactly know what kind of income the person has. You can always find out what kind of obligations the borrower has. The problem is more on the self-employed side of it. India being a country where the data is not available. So if you're talking about the ITR filed by self-employed, I think that's not good enough data to underwrite those customers. If you're talking about those new startups who don't have a credit history, then obviously that's a segment where the problem needs to be solved. So salaried and self-employed, more than that, I think, as I said, how do we go about using alternate data to underwrite these customers? That is something that needs to be resolved. I think that's where the challenge is. And there's enough and more data. I was just mentioning that, GST data. GST could be a surrogate for finding out what kind of turnover the SME is having. Maybe it defines loan, maybe it could start with a small sachet loan kind of thing and to a large ticket size loan. So all of that can be resolved through that.
Okay.
Yeah, so I think the customer segmentation is very important in a country like India, because India is so diverse, right? We were discussing before the call Satara versus Mumbai, right? For example, completely two different profiles of customers. Thought process mindset is very different. Salaried, not salaried, these kind of things are there. Even within salaried, people in Mumbai versus Delhi behave very differently. If you look at the adoption rate, the risk rates, etc. So I think the customer segmentation needs to be broken up even further. I think, and the onus is on the lenders and policymakers in terms of how do they want to actually connect to the customer and offer the best product. So I am a big, coming from analytics background, I'm a big fan of creating more segments, do more customization, personalization in terms of how can we actually serve customers better. But, having said that, the systems, and again, I'll come back to the same infra problem, can they handle that many segments of customers, right? Can they create those many products, to be able to serve those kind of various segments, right? Can the business rule engines or loan origination systems, can they create that many products in the system? It actually boils down to that. But, coming to more segmentation, it has to be there and it should be there, basically.
So I come back to my first question.
I'd just like to add what he said. I think the point perhaps is, apart from this, is there a geography plays, is I believe you were trying to ask. Yes, definitely. There's a purchase parity which you have to take into account. A self-employed with X turnover in a tier 1 city versus tier 2, those kind of segmentation is something which you can work. But as I said, the larger problem is how do you go about capturing that information? I think that's a very, very critical
Yeah.
point.
See, I don't know what banks play a role in this and the fintechs, the NBFCs, which play a role. I have this a question, a kind of a surprise that a fintech who does into lending celebrate 100 million funding or 200 million funding in India. But India is vast. India is big. The 200 million, the funding what they got, I asked them, what is your monthly expectation to give the loan? They told that we want to touch 1,000 crores. तो आधा चले गया पैसा उसमें तो. 200 million में तो 1,000 crores is almost more than 50-60% is gone. So, but you want to grow. Where you want to grow? What is your, how you measure your growth? You want to grow beyond what you are serving areas today, or you want to kind of double up the loans for the users who already you giving? What exactly is that? So does banks and the fintechs really believe, a kali topic hai, or they really believe that they want to go the corner of India and give the loan to the people which is half secured like a metro person, surety than a metro person? Yes, sir.
Yeah, I think here fintechs can play an important role. As far as you were also talking about the size of the book, what they are building and all. I think the role of fintech is more on the kind of business models you create. There, I think fintech can play an important role. You create a proof of concept, and if that proof of concept is working well, then partner with bank. They have deep roots, they have deep distribution, they have deep penetration. So you can go to the Bharat and lend. But the very concept of building that model is something where fintechs can play an important role. I think that's how the partnership between banks and fintech can really work well in this segment.
Yes.
I think there are two elements, I think, where banks and fintechs can partner and it can go a long way to go deep root. One is basically creating awareness. Having digital platforms available in the deep pockets of India now is very important. That first they create awareness. It could be local or it could be on a global level, whatever it is. And second is create the right products. Again for those segments, right? So, for example, when we talk about lending, typically it's a personal loan or a consumer lending we talk about. If you look at microfinance, it is it is available in deep geographies. It's a completely different segment, different way of underwriting, different product, different ticket size, and everything is there. But I think we need more such models to be able to cater to those segments, to be able to get more out of it. But I think that's where I think fintech can create products, create awareness, and behind the bank, banks and NBFCs can power them to do more lending, etc.
How you place this last minute thing? So what is the last minute? Like if you go to the smaller regions, smaller cities, smaller villages, if they need money, if they need 10,000 rupees for the health, for the school fees, for anything, the turnaround time is 1 hour. The answer, yes, I'll give the money, or no, I don't have the money, right? But when it comes to the digital space, it takes time. Is one of the gap that the trust factor that my TAT is 1 hour. I'm okay to pay a little more interest in the local, getting from the local person rather than depending on the digital. Although we say 2 minutes loan, 3 minutes loan, but is people not believing that? Are we able to achieve the TAT? Yes.
No, as far as digital lending models are concerned, it has the potential of giving loan not in 1 hour, it can give loan in 10 seconds also. And we do have models available today. Most of the lenders today are able to give loans to their existing set of customers within seconds, So that's not a problem. It's again, because they are sitting with so much of information about that customer, they can take a call on that. So if the answer is yes, digital media can or digital lending can easily create those models where you can give the loan. The thing which is really hindering this kind of approach is perhaps one is obviously the penetration. Are you present in those locations, those areas? And secondly, to an extent, we haven't worked in rural India much directly, but yes, given my past experience working in automobile industry, there's definitely some bit of trust factor that also comes into play. Still, you will have the local lenders having a deeper connect with the people who are taking loans. I think that part it's changing, but I don't know whether it has changed to the large extent or not.
Okay. Thank you. Thank you so much. So this is part one questions. There are part two questions which we have, which are going to come now. Before that, I want to ask anyone have any questions to Saurabh or Pramey? One or two questions, please. So we are entering into the next subject. Anyone? Yes. One gentleman. Nadim, can you help with the? Yeah. Can you give a mic, please? Yeah.
So I'm Vignesh. I'm founder of Pentafox Technologies. We are into small-time API infrastructure for lending. I just want to know how will co-lending or consortium funding will play a major role in reaching the full potential in the untapped credit market.
I think co-lending is a very good model, and one has to also see how the regulators are looking at co-lending now as a model. But if, as I said, that if fintechs are building models, business models or product, and if there are NBFCs and banks who are willing to partner, then co-lending could also be one way of figuring out what is the proof of concept, whether it's working or not, and your skin in the game. So fintech has their skin in the game in a model like that. In my personal view is co-lending is definitely a very good model. But given how the regulators are viewing co-lending or the FLTG models today, one needs to see in what direction it's moving now.
I'll just add a few points here. Like in today's world, I think a lot of things are very volatile, like stock market. So the key thing is results don't come very quickly. I think these models are getting tested, and there are a lot of good results coming out at a lot of places. So I think the fintechs can create the point that I made earlier. Awesome products, create awareness, while behind the back lenders and NBFCs and banks can actually partner with them and deliver. So this model, at least I'm very positive about, that it will pave a great way further in terms of lending.
Okay. Thank you. So, Saurabh, that farmers are the biggest kind of a big population. Do you think this digital lending, how kind of integrate with the farmer's requirement? Not just a farming loan, farmer loan, or is there any way that you think this, because one of the untapped market, this is the largest population, which I understand. So can you just throw some light on that?
So I'll just answer this question with an example. When we were having one discussion with the ministry, so one of the problem statement they said, and this discussion was slightly related to this. So we were discussing about mudra loans. So one of the simple challenges what today government is facing, that those who are showing interest in getting a loan, and that information the banks are supposed to, the local state-run banks are supposed to capture that, even that's not happening properly. And there are a lot of customers who have shown interest. There's no paper trail. There's no track of that. A simple thing like digitizing the entire application process can go a long way in helping. I think that could be the starting point. And then obviously, then it's never ending. Like if you're talking about like Kisan credit card and all those things, obviously that will also require some bit of the payment ecosystem to evolve. So if that evolves simultaneously, and it will take time, it's not that easy, but still things have moved in the right direction. Then obviously payment and the lending aspect integrated together. I think there's a future for getting into these segments.
Pramey, can you चलो लोन दे दिया पैसा untapped market में गया because you are a data person. So can you tell me how one fintech or bank should handle the risk?
I think great point. So I think you'll hear this very often, that the risk process starts not post lending. Actually, it starts pre lending, right? The time customer touches your branch or individual or your app, your risk process starts there itself. And the key process is that you start collect right information about them, right? What does the person do? Why does he need loan? Is it an aspiration loan or is it a need loan? What it is? Can he repay? Can he not repay? What are the potential rates we should price them better? So that information collection happens from there.
वो सब अभी कर दे तो लोन ही नहीं दे पा रहे.
I mean, yeah, you're talking about risk, but let's say even if there are certain parameters that you have taken some risk on, this is important to be able to rightly monitor what happens post loan, right? So, typical. I remember in my previous days, let's talk about the Kisan credit card or other farmer loans, etc. There used to be a process that I've seen with the bank that people will go and visit the customer as well, right? So, if you think of doing a digital instant loan in that sort of a situation, it's hard to be able to have a policy where person visiting it, verifying it, and then coming back and then signing off the loan, right? So digital is very difficult to do that. But containing risk, basically post lending also, right monitoring, ability to collect in omni-channel way, not just cash collection, but right ways of collecting the money is also very very important in terms of to contain the risk.
So, the thing is that if you little sensitive for both of you and for everyone, this is a little sensitive matter. Recently, in last 1.5 year, I'm hearing that given the loan, the way the collection happened was very bad, and too many calls, friends, and everyone is going. It's because digital this happened. That's why the people came on Twitter or social media started making a noise on this. But ये तो सालों से हो रहा है. But किसी को लोन दिया आपने, किसी से लोन लिया, if you don't pay, they come and take your bike or they lock your house or they will come and make a noise. आपका इज्जत निकाल देगा उधर घर के सामने आके. वो सब करता था. वो पहले से आता था. इस डिजिटल जैसा लोन दे दिया, अब इस डिजिटल थ्रू लोन मांग रहा है. बट ठीक है, अनएथिकल प्रैक्टिसेस है. आई एम नॉट सपोर्टिंग दैट. बट what must be the borrower mindset? Saurabh sir.
There will be customers who will not have the willingness to pay, and that's the reason today, models like in the lending process, psychometric analysis is also, is becoming a little popular now. There are a couple of fintechs who are trying out these kind of things. So there will be customers who will try to defraud the system, those who will not have the willingness to pay and all. Here, I think in collection, AI
Sorry, I want to correct. Willingness to pay और मेरे को पता नहीं वो किधर है, मैं उसके ऊपर नॉइस क्रिएट कर सकता हूँ. इज एनीवेयर फिनटेक एंड बैंकिंग, लाइक मैं बताता हूँ अभी जो अनएथिकल प्रैक्टिसेस बाय इलीगल कंपनीज हैड ए सीन in last 1.5 year in couple of states, because they can't go into the major cities, they have to go to the untapped market, as we say, and they try to had this stint there, and they had a created little bad mass. So what I'm saying that is the ethical, legal, active companies, banks, and are they really face these challenges if they give the money there, the risk factor, यार हम जाके उधर करेंगे तो वो लोग चिल्लम चिल्ला करेगा. Rather not enter into that market, recovery will become a bigger challenge.
Yeah. It's pretty much part of it. So obviously it's part of your entire lending process. So yes, you will have certain kind of sections where you will have such kind of issues.
So that's why my first question is: borrower stopping or a lender is stopping? Because in this case,
no. So there are two different things we are talking here. So one is we are talking about a market potential. So there the question was more on the borrower or the lender side problem. There, as I said, that it's more of the demand is not a problem, it's on the supply side of it. This is a different problem. We are talking about 2% of your entire lending population. How do you go about treating them? And there are 2% of the people who are not repaying. So I think market potential and this aspect of the business is something, two different things. And obviously there could be a play of improving the way we recollect in the market today. There's no two thoughts on that. Today, you can build AI models which can recommend actions which we can tell to the collection agents that use this action. This is how the propensity model is suggesting that this is the way to collect money and all. All that thing is still not happening in the collection side of it, but there is definitely scope of improving that side.
So I have see the question what I asked the first one and this one. There is because atmosphere makes a huge difference. What kind of atmosphere you are creating? I'll ask a connected question. Is Dharavi is untapped market or is don't want to give the loan market?
I think it's a difficult, it's a practice, it's an unwritten practice. We all understand that. yes, there are areas where there is a community which restricts, and banks have a way of, but not necessarily every person staying in Dharavi is a bad customer. So yes, data analysis and all those things, you can create models. I think maybe you can answer on that, how to go about creating models who stay in Dharavi.
Uh, I would say regulations are important, right? First of all, who's lending? Are they doing the right thing? Because we've also seen lenders doing a wrong practice by giving loans in a click of a button without doing much authentication and then doing all this, right? Uh,
What
and
do,
regulations from the individual point of view also, that they have to follow a certain behavior in terms of after taking money, right? And if that doesn't happen, obviously lenders, you can think that they will behave customers with full empathy if there is a situation that they cannot repay, etc. But I think there are regulations already in place. I think they do work best, and obviously any lender or anybody, they are into business, right? So they would want to see profitability. They would want to see how much effort that's there, that's going into making money in that segment, etc. So I think probably regulations in the business model will play a bigger role in terms of making those decisions.
okay? This I'm hearing for long, but that is not happening. So, do how you guys are deep into the corporate world, and how this AI and ML works helps this decision making or handling the risk.
Well, on the lending side, two areas I can think of. One is obviously the customer experience management. That's one area where I feel that all these AI and ML models can play an important role. So, to give an example, the propensity scorecard can actually give you a fair sense what kind of product should be sold to what customer. I think that's right product for the right customer. Or on the service side of it, those AI-enabled chatbots can actually predict the profile of the customer, and obviously in the process you can service the customer better. So these are the areas on the customer experience I feel AI can play an important role. We were talking about risk management. I think that's another area where I think AI can play an important role, whether it's a pre-ac or post-acquisition, both. So post-acquisition, we just now spoke about it, that they can actually find out what kind of collection action needs to be taken for those defaulting. So you can have such mirror cohorts, and you can figure out what kind of models what kind of action you can recommend to agents and all. Pre-acquisition is all about analyzing the alternate data available in the market today, whether it's a GST data or a utility data, telecom data. There's a lot of data. There's so much of digital footprint available today. So marry that with a conventional way of looking at a bureau, and create models, and that's where I think AI and ML can play an important role.
I think that's the future we are getting towards. I think we are going there. I think I don't know any bank or any NBFC or any fintech doesn't lend without scorecards and lend without having scorecards or predictive models in place. There are a lot of marketing team, a lot of institutions who use data to the core, and I think that's where I think the models will come into play. The key question here is again, what data is there, because it doesn't become a garbage in, garbage out situation. So, what data is lenders can collect, what data they can play around with. I think that's the critical thing. And any next action, not just the product, but any action for a customer can be predicted with very good, reasonable predictivity in terms of what will they repay or not, what product they should buy, how much they should be given loan, etc. So I think there are a lot of scope there. I think probably we are scratching the surface, but it takes again, it's a long journey that will keep evolving, and there will be again different business models that will come in. Different ways of modeling will come into picture to be able to succeed, basically.
Thank you. So Saurabh, you are into this credit card. Credit card market is, I mean, it's, I don't know, is it growing? Is it degrowing? Is it stagnant? One question. The number two is, when a farmer or a person who living in a village having a decent income, someone like urban 30,000 rupees or 40,000 rupees monthly income, can go to a bank, or bank can go to him and tell, this is your credit card. Will this generation of farmers will see that, or will have to wait generations to get a card because of less than 5% is equal to failure.
Yeah, that has been. I think that's what you're saying is true. I think credit card penetration in India is pretty low. Maybe 3.5% is the penetration, and reason being it's a fairly risky product, and there are only limited number of banks issuing credit cards in the market today. So obviously they are pretty
I
much.
have a thing. How you can say it's a risky product? जिसका सैलरी 40,000 रुपए रहता है वो बॉम्बे में रहता है उसको आप क्रेडिट कार्ड देता है जो गांव में रहता है उसका जमीन है उसके पास घर है सब कुछ है उसको क्रेडिट कार्ड क्यों नहीं देते?
You are from lending, so you understand lending pretty well. But if you look at, let's take pandemic as an example and how much money banks have lost. So you will realize that why it is a risky proposition. And it's not only once. I think many cycles you have seen why credit card is a fairly risky. It's a highly profitable business also in good times. But it's a risky product end of the day. So that's the reason why the penetration is low. And the other factor, which is very important to understand here, is credit card is issued by banks in two NBFCs. So they are pretty much defining how the credit card industry will evolve, right? So it's their willingness or it's their ambition or it's their appetite which decides the market of credit card. As far as going deep into Bharat on credit card, yes, it will take time, but there are ways and means of doing it today. It's things are opening up, and I'm hopeful that it will penetrate into smaller cities as well.
Yeah, hopefully this generation.
No, but if you look at it that way, credit cards, like it's a more of a cash flow kind of product, right? You use it daily, you wherever you go, transact, etc. And there is a product in place, Kisan credit card is there, right? Where they can withdraw money at any point, and whenever they get the proceeds of their harvest, they can repay. So in form that's there, but key thing here is where will farmer use the card? If you look at it from most of the credit card users in the country, they're more of aspirational users, I would say. They would want to go shop around in mall, they want to go do e-commerce transactions, they want to do other things. But typically that kind of behavioral change we are yet to see in the farmer's lifestyle as well, right? And once that happens, probably it will reach there.
No, that could be a blessing in disguise because one of the problem today with allowing withdrawal is that the money is not getting used for the things what they are supposed to get
Right.
used, right? So if you create a payment ecosystem, it could be a boon, it could be a blessing in disguise to that extent. So
I
that's a payment ecosystem that needs to evolve.
Exactly.
I have a last question that anything or any business, it has to grow from aspiration to business to profits and to end as a cause. So is lending is a business or is a cause?
No, it's both if you ask me. For for lenders, obviously it's business first, and then obviously it's a cause. But having said that, why I'm saying it is also a cause because it helps in financial inclusion. That's a fact.
It cannot be both, sir. Only one hoga.
No. So it depends on who's wearing what lens. I think it depends on that. But if you just look at it in a very generic way, from a government's lens, obviously, if you're talking about financial inclusion, then lending has to be part of that. But if you're purely looking from a lender's perspective, obviously it's business for them. So I know, I think it's a difficult question to answer that way, but in my mind, for anyone who's lending, is a business first.
In my view, it has to be aspirational because India is so behind in terms of credit penetration, cards penetration we are talking about, etc. So until we have aspirations to become an economy that can make credit available to most of them, I think it has to go there first. Aspirations and then maybe grow as a business.
Yeah, I don't know when that will happen. It is a business for me. It says because there is where causes which address every sector of a person. Business is when you address a certain sector of the people. So I consider it as a still business. I think I don't know when it will grow as a cause. Thank you so much, Saurabh. Thank you so much, Pramey. And any questions? Yes, there is one question from Aditya Save.
Thank you. This was a really fascinating conversation, and I realized that there are no easy answers. One of the things that I picked up in this conversation is that there is a lot of hesitation on on fulfilling the demand that already exists, right? So um, if you sort of zoom out and say, let's not talk about the entire untapped market and let's talk only about, let's say, the next 30% growth. And I would love if all three of you could respond to this separately. Is there a problem of time, which is that we've not spent enough time in digital lending, let's say, for example, the way e-commerce already has, and therefore learning that evolves over time? So is it a time problem, or is it a trust problem where you don't know enough to be able to even trust the person that you want to do business with?
My short answer will be trust. I think people have not experimented with segments which they are not very comfortable with. I think time is not a factor here. It's not very difficult to solve for the problem, but I think trust is something which people are hesitant. At the end of the day, as you said, that it's a business model also. One needs to make money in whatever business they are in. So my short answer will be trust.
For me, it's actually both. Um, if you just look at pure data perspective, uh, there has been the credit market. If we remove the pandemic period, maybe a couple of years, it has been growing at a very consistent rate. Indian credit market is growing at almost, I think the maximum speed in all the economies, in the world, right? Forget about the developed market; they're already penetrated. But even underdeveloped market, India is growing pretty fast. So it is a time factor. Probably we'll get there. I don't know this generation or maybe next, but we'll get there. And trust factor is definitely there because if you look at a lot of population, when there were certain segments in geographies, untapped geographies or rural locations, etc. Many people did not have even documents. Before Aadhaar, if you look at it, if you want to go and ask for an ID verification, etc., people did not have documents. So, which are now in place. People are living, they have now Aadhaar, there are few other documents that are coming into picture. So I think slowly and steady we are evolving, probably not at the pace that we would like to see, but it is happening. So I think both trust factor and time factor will and are playing a big role.
I think they have not spent enough time, and there is a like factor, and also there is a demand and supply issue is there. There is supply issues because they like to work with the already experimented markets and not want to get into untapped market and experiment with the available supply chain. So I think if they spend some time on this notion, like 4% or 5% जितना इंडिया पॉपुलेशन में जितना है उतना क्रेडिट कार्ड से I mean, it says purely that they don't want to get into certain market. Otherwise, the cards giving is not a big issue. This is what I say because it cannot be so low, 4 to 5%. That's it. Any more questions, or we are good? Good. Two, three questions, but no one is asking. Chalo. Thank you. Thank you so much. We're good.
There's one.
There's one? Okay.
Yeah.
Sorry. Yeah.
Yeah, okay. My name is Pavitra. So, what I try to understand from the banking perspective, I mean, do we not have much of a trust in our SME business or in the individual side also? Because we always talk about SME is the backbone of the country and everything, right? Now, when it comes to the loan lending part of it, we always look for, rather than getting into the business model of the SME from the unsecured side of it, because a lot of them do not have properties. The first question a banker asks, "Yaar, property kitne ki hai?" That is one question. Secondly, I look at it on the similar way in the retail credit also. People or bank or even in fintechs, they are more comfortable to a lending to a salaried customer rather than somebody who is earning his own money, right? Maybe I'm having a 50,000 income from my business. I would not get a credit card approved. But if I'm having a salary of 50,000, I will approve. So when we are talking about an example of a farmer, it is not only about farmer, it is about a small businessman also. So do not have trust as a financial system on our SME businesses?
I'm your side. Okay, the question to them.
Same here.
Okay.
Same here. I think it's related. I think it's related to the previous question. Definitely trust is an issue here.
I think the system is yet to evolve and get there where we want to be, because if you look at the same SME example or somebody, yes, people ask for property, but the next question comes, how do I evaluate you as a customer that you are worthy enough for X amount of loan, right? So you need something to get evaluated. If you look at like pre-demo period, probably if you look at anybody's bank statement, you wouldn't find a bank statement that you can use to evaluate and give loan. Let's say the person is demanding X amount, but you will see there are no credits in account, right? So uh, the trust factor is again is there, but again it has to be both ways, I would say, rather than just putting everything on bank and says that hey, they don't give us lend money, etc. But I think it has to come from the other side as well, that they have the right documentation, right things in place. There's a right purpose for the loan as well, right? So while I'm not defending banks and policies, etc., but I think it has to be both ways. And again, we are evolving there. Even there's so much government push through mudra loans, etc. That's there. So it's not that it is getting hampered, but again, with time, it will evolve. Business models and those things will evolve, and it will become easier, I hope.
Okay, so one feedback. So I'm basically a banker only, career banker. So I have nothing against the bank. So my query is that, so for example, let's say a shopkeeper, right? A bank is co-lending through a fintech partner to that shopkeeper, right? Without any security. If the same person goes to the bank, then he says कि either ये shop आपकी अपनी होनी चाहिए या घर आपका आना होना चाहिए. But in case of a co-lending, the bank doesn't ask for it.
Because bank has mitigated risk with the co-lender, right? So bank is a is a risk business at the end of the day. They're playing with the real money, and they have to ensure that the money they are getting from the savings account person or current account person, they have to maintain that money as well, right? At the end of the day. So if there is somebody who's ready to take the risk, even half the risk or majority of the risk, why would a banker say no at the end of the day?
Got it. Thank you.
Thank you. Thank you so much. Thank you, Saurabh. Thank you, Pramey.
Thank you. Pleasure. Thank you. Thank you very much.
Thank you, audience.
Thank you so much.